As we can see, the Dow has come back up, taking back a good portion of the selling or the sell-off of last month. Today, we expected some profit taking merely on the basis that we're getting up here toward the overbought area. And the Japanese race traders always kind of illustrate for us where do most people buy? They buy exuberantly at the top. That's usually indicated by a gap up near the overbought area. So the candlestick investor has the benefit of graphically analyzing what might occur up here. We know there's a high probability that when a resistance level or potential resistance level is breached, they may take profits and come back down and test it to see if that resistance level is going to act as a support for the next uptrend. The fact that they gapped it up and had a big day on Wednesday is a little bit of an alert that there might be some profit taking. The benefit of seeing a doji in today's trading allows us to decipher which way they're probably going to move it based upon how the markets open tomorrow. The doji rule is if they open it positive, they're going to take it positive. If they open it lower, more than likely they're going to back it off. The NASDAQ has created the same relevancy in the sense that they gapped it up yesterday through the 200 and the 34. Again, we use the 200 because that's what every major money manager uses around the world, along with the 50 to make their decisions. Then the 34 is kind of a little added indicator that helps show when support and resistance levels are hit. But today, the NASDAQ did a doji harami. Stochastics getting up toward the overbought area makes the analysis very simple once again. If it opens positive, they're more than likely going to trade it positive. If they open it lower, look for a bobble setup, which means they'll probably bring it back to test the T-line. Then when they come back up through the 200 the second time, that's what we call a bobble breakout, telling us there's more upside. The candlestick investors still have the benefit of knowing which is the strongest signals. ETSY, ETSY, was recommended today based upon the kicker signal that formed yesterday. Opens here, closes here. Kicker signals where they open at or above the previous day's open and go in the opposite direction. If it opened positive today, told us the bullish sentiment was still there, which is what we expect from a kicker signal, a very strong upside move. Kind of the same analysis on our recommendation on MNK. You can see how it based right in here. Almost kind of a cradle pattern. And then they gapped it up, did a strong day through the 50. And then yesterday they actually traded it off and used the 50 as support and went higher. We were buying yesterday with the anticipation that a very common reaction is a 45-degree off of that strong price move allows us to be a steady eddy to the upside. Using the simple rules that the Japanese race traders have provided for us based upon what human nature does time after time allows us to be in positions where not only are we having a high probability of being in a correct direction, but the magnitude of that move is extremely strong. That'll be it. We'll see you in the chat rooms.